your account goes up. When you use your debit card to make purchases, your account goes down. In direct credit clearing, we have a similar process. So we can dispense with money. The remaining balances involved in a credit clearing process might be settled at periodic intervals using some kind of money, possibly the gold dinar, or the balances might be carried over indefinitely. If the credit is properly managed, ultimately we don't need periodic settlement. Here's a pictorial demonstration of how this credit clearing association works. The smiley faces represent the members of the credit clearing association. Not all of these members will have overdraft privileges. The green ones have overdraft privileges. These are called issuing members. Others must have a positive balance in order to make purchases. But the issuing members begin the process by buying from other members. So credits get transferred in that way. And they move around within the circle. And ultimately, the creator of the credit needs to redeem it by making sales. So suppose $1 million worth of credit is created within this clearing circle by this association of businesses. That means that their collective cash expenditures have been reduced by $1 million. That's $1 million that remains within the association that can be used to pay for purchases within the membership rather than flowing outside to pay for imports. If the turnover is 10 times a year, that means $10 million of additional sales for the associated members. And if the rate of profit on sales is 20%, that means $2 million a year in additional profits. But further, it means that that much working capital need not be borrowed from banks. And if the interest rate on bank loans is 10%, that means that the businesses together will save $100,000 a year in interest costs. So in summary, one less dollar needs to be borrowed, one less dollar needs to be spent, and one less dollar needs to be repaid with interest for every dollar that is created in the credit clearing circle. Now, the best example we have of a credit clearing association that's been successful over a long period of time is the Bank in Switzerland. This bank was created during the 1930s in the midst of the Great Depression, when conventional money was in short supply. Small and medium-sized businesses got together and formed this clearing association. They decided that they would trade with one another using their own internal credit. The Bank now has some 60,000 members all over the country in Switzerland, and in 2004 they cleared a total value of about $1.35 billion worth of goods. So the advantages of direct credit clearing are it provides an exchange medium that's more readily available. It's created on the basis of the exchange of real value, goods and services changing hands. It is more democratically allocated because it's decentralized and controlled by the members themselves. It's independent of external manipulation of interest rates and the supply of official money because it's independent of that system. And it's free of interest costs. So I'm envisioning a likely scenario, and in fact advocating this scenario, a several-stage process. When Dr. Mahitar spoke in 2001, he spoke of this first stage, which was already underway. Many Islamic countries, under the leadership of Malaysia, forming bilateral trading agreements and eventually an Islamic trading bloc. We can also see trading blocs emerging in South America and elsewhere. It was mentioned earlier today that Venezuela has pulled out of the IMF, and there is a trading arrangement now between Venezuela and many other South American governments. In the second stage, these nations begin to trade with one another using bilateral and multilateral agreements that utilize the credit clearing process as intermediaries. And they offset the cost of imports against the receipts for exports. They will settle their accounts at periodic intervals using some mutually agreed currency. Initially, the settlement may be in terms of dollars or euros. Eventually, and hopefully, settlement would be in terms of gold or silver, the gold dinar. And that's stage 3. But at stage 3, we also hope to create a common value standard. The world needs a common pricing unit that is not tagged to a political currency. Defining it in terms of gold or silver is a step in the right direction. In stage 4, the member nations form a clearing union in which the sales to members offset purchases from members. And here's some point where you may disagree with me, that they will eventually abandon gold as a payment medium and utilize the gold dinar only as a measure of value and pricing unit. In stage 5, settlement itself is suspended. As more experience is gained and the system demonstrates its effectiveness, member nations will begin to realize that the period between settlements can be increased without adverse consequences. So they gradually lengthen this period between settlements and eventually dispense with settlement entirely. Now, it seems inevitable that eventually balance of payment problems will develop. And as these balance of payment problems develop, we'll move into stage 6 to deal with that. Associated countries will create mutual assistance programs that provide development finance on a shared risk basis. Now, this will be a huge improvement over the World Bank and the IMF, which is really an exploitative regime. The associated countries will provide financing to help countries with balance of payment problems to become more productive of goods and services that are desired by their trading partners. In stage 7, we will adopt a composite commodity standard. I wrote about that in my first book in 1989. It's called Money and Debt, A Solution to the Global Crisis. And in part 3, I described the composite commodity standard and a unit of account based on that composite. So realizing that the gold market is easily manipulated by those who hold gold, mainly the central banks and the central governments, the Islamic trading bloc countries will abandon the gold dinar as a value standard and adopt the common pricing unit based on the market basket commodity standard. At stage 8, non-Islamic countries, seeing the benefits of the system, will seek to join the Islamic trading union or form clearing unions of their own. And eventually, as E.C. Regal said, we will have one common global monetary language, and it will be based on this credit clearing process. So in summary, I want to leave you with these thoughts. Political money is credit money that is used to concentrate power and wealth. This seems to be generally well understood. Secondly, private initiative and enlightened government action can evolve credit money into credit clearing to serve the common good. Thirdly, with credit clearing as the means of exchange, gold can be the pricing unit initially. Fourth, true Islamic prosperity can be achieved through the organization of direct credit clearing associations. And fifth, dollar hegemony can be transcended by organizing trading blocks that use credit clearing instead of international currencies as payment media. In a recent speech, Russian President Vladimir Putin challenged the global financial order. He is surely correct when he said, quote, "Institutions such as the World Trade Organization and the IMF are archaic, undemocratic, and inflexible." He also said that, quote, "The new architecture of economic relations requires a completely new approach." However, his ambitions for using the ruble or any other manipulated political currency as a counterweight to the dollar falls far short of what is needed. My proposal for the formation of a network of independent credit clearing circles that use an objective standard unit of account for pricing is a genuinely new approach that will create harmonious economic relations and correct the maldistribution of power and wealth throughout the world. Thank you very much.